Welcome back to Weekly. Joining me now to chat about North American real estate is Andrew Moffs, Senior Vice President and Portfolio Manager at Vision Capital. Andrew, thanks for joining me on Weekly.
Thanks very much for having me.
So to set the stage a little bit, you've been analyzing and managing money in the North American public real estate sector for 15 years. You run a real estate long-short equity hedge fund at Vision Capital. Tell me a little bit about Vision and about the hedge fund.
Right. So the Vision Opportunity Funds are is a long-short real estate fund focused on publicly traded North American securities. The mantra at our fund is we can buy real estate cheaper in the public markets than we can in the private markets. We're total return investors. We're yield agnostic. We find too often that investors are too focused on yields when they choose their investments, and that's a product of Bay Street selling yield because yield sells. What we can do as net asset value investors and going bottom up is simply find out the stocks that are trading at a discount to their net asset value, buy them, find the stocks that are trading at a premium to net asset value, and we will go short.
So let's talk about some of the rules of your book. How much of your book is typically in the States or Canada?
Great question. We look at it two ways. Our gross exposure, the sum of our longs plus our shorts, would show that half our capital is in the U.S., half of our capital is here in Canada. If you look at our net exposure, our longs minus our shorts, we have 80% of our exposure in the United States. So on balance, we're actually short commercial office space and retail in Canada. I would note when we show those exposures, we actually hedge currency in the United States. We don't make a bet on the dollar.
You pay a distribution?
We do pay a distribution, 4.5% per annum. We pay that quarterly. Our investors can choose if they want it in cash or if they want it reinvested in the fund.
And with respect to currency exposure, what do you do?
As I mentioned, we hedge. We don't want to make a bet either way. We are real estate guys. We just want to find real estate cheaper on Wall Street versus Main Street.
Okay, now that we've set the stage about you, let's talk about the real estate sector itself. Are you a bull or you a bear?
Generally speaking, real estate fundamentals are quite good. It's been a great few years to be a real estate owner. Demand and supply fundamentals are good, generally. You have to go market by market. And more importantly, capital inflows into real estate are as high as they've ever been. In a world deprived of yield, capital seeks real assets, and that is real estate.
And so Canada is more expensive than the U.S.?
Definitely. That's something we continue to believe. When you look at the United States, frankly speaking, in the public markets, real estate's on sale. We're seeing the widest discounts in net asset value that we've seen since the global financial crisis.
And why is that?
It's a function of two things. One, the private markets. As I mentioned, inflows into real estate continue. So cap rates are at all-time lows. That's a good thing. But in the public markets, there's this overarching concern we find from time to time that people are concerned that rates are going higher. What that does is cause inefficiencies that we can take advantage of. Case in point, a company called Camden Property Trust, $7.5 billion U.S. listed market cap, one of the largest apartment landlords across the United States with a focus in the Sun Belt. Great markets. Their assets, I'd say, every apartment asset of theirs better than anything you'd find in Canada. It's trading at a 25% discount to net asset value. You can buy their assets for an implied 6 cap in the market when every apartment trade we see in those regions are anywhere from a 5 to 5.25 cap rate.
Now, what if I come up here in Canada and pick on a boardwalk, for example? You say Camden trades at a 25% discount to NAV. What would a boardwalk trade at?
So that's an interesting question. And just talking about Camden, the reason why, you'd ask why that discount? 13% of their NOI is in Houston. Me as a Canadian...
Net operating income.
Net operating income, correct. Their cash flow. Me as a Canadian, Houston's a high-class problem. If you look at Camden last year, their worst market was Houston, and that was 2.7% rent growth. Let's talk about Boardwalk, concentration in Alberta. That's a less diversified market than a Houston.
Right.
So with Boardwalk, they were oversold for a period of time, have come back. The issue in Canada is you're not seeing trades. We don't know what cap rates are. And the NOI, the cash flow. There is a question of what will happen to rents this year in Alberta. And so the net asset value is a moving target.
You mentioned cap rate. What is a cap rate?
So the cap rate is, simply put, the inverse of a multiple. And another way to think about it is what is your going in return in your first year for buying real estate? Very similar to the yield on a bond.
And why is real estate expensive in Canada if it's inexpensive in the States?
Well, it's a great question. A lot of it comes back to the structural inefficiency that exists, and frankly, why my three partners, we have a combined 85 years experience, why we take advantage of it. The big inefficiency, if you look at Canadian REITs and real estate companies, the ownership, 80% is retail.
Okay, so let's go back down to the States again. When you look at the U.S. real estate public markets, what are a couple of differences that you see down there versus up here?
In the public markets, the inverse. You see almost 90% of publicly traded real estate stocks owned by what I like to call the REIT mafia. These are institutions that have their allocations to real estate via the public markets. What does that do? They care a lot about capital allocation. They care about corporate governance. They care what these REIT management teams do with their capital. It's very different. Here in Canada, Bay Street sells yield because yield sells. What's an investor looking for? Yield. They're not looking at, well, are these REITs allocating their capital appropriately?
Sounds good, Andrew. When we come back from break, we're going to talk more about what's going on in the U.S. real estate market, and we're going to drill down to some of the companies here in Canada. You're watching Weekly on BNN, and I'm chatting real estate with Andrew Moffs of Vision Capital.